Have you ever wondered how some traders just seem to, predict the future? Well, spoiler alert, it's not magic, it's a language. And today, we're going to teach you how to read it. Welcome to our explainer, where we're decoding candlestick patterns. So, you've probably seen a stock chart before. And if you're like most people, you just see a chaotic mess of green and red lines, right? It can feel like trying to decipher some ancient, forgotten language. But here's the thing. Within all that chaos, there's a story. It's a constant, intense battle between buyers and sellers. And I promise you, by the end of this, you'll know how to read that story. So let's start with the absolute basics. Before we can read the story, we've got to learn the alphabet, right? So let's dive into the single most important building block on any of these charts, the candle itself. Now, these charts actually come from Japan, and they're pretty brilliant because they pack a ton of information into one really simple shape. For any single time period, doesn't matter if it's 1 minute or a whole day, each little candle tells you 4 crucial things: the open, the close, the high, and the low. Let's break it down. This thick part right here, that's called the real body. You can think of it as the heart of the story. It shows you the main battlegrounds between the opening price and the closing price. And here's a tip. The bigger the body, the more intense that fight was. And what about these thin lines sticking out? Those are called wicks, or sometimes shadows. They show you the full extent of the battle, stretching all the way up to the highest high and all the way down to the lowest low that was reached in that period. The color is the simplest part of the story. It literally tells you who won. If it's green, the bulls are in charge. The price closed higher than where it started. If it's red, the bears are in control. The price closed lower. It's that simple. Buyers won or sellers won. Okay, so now that we know the alphabet, let's learn a few words. We'll start with what are called bullish reversals. These are patterns that can signal a big shift from a downtrend to an uptrend. They're basically signs of the bulls getting ready to fight back. First up, we've got the hammer. This is a classic single candle signal that looks exactly like its name. And its powerful shape tells a really dramatic story of a comeback. The hammer appears after prices have been falling. Sellers try to just hammer the price way down, and that's what creates that super long lower wick. But then, and this is the important part, the buyers fight back hard and push the price all the way back up. It's a clear rejection of those lower prices. So what does this mean? For a trader, it might be a sign that the sellers are exhausted, and it could be time to look for an entry. All right, now let's look at a 2-candle pattern, the bullish engulfing. This one is incredibly powerful because it shows a sudden, really dramatic shift in who's in control. Just picture this. The market's been falling, right? That's our first red candle. But on the very next candle, the buyers come in with a vengeance. This new green candle is so strong, its body completely swallows or engulfs the entire body of the previous red one. It's such a clear visual that the buyers have wrestled control away from the sellers. Next up is another 2-candle pattern, this one with a really memorable name that comes from its Japanese roots, the bullish harami. So, harami is the Japanese word for pregnant, and honestly, it's a perfect description for this pattern. You have a large red mother candle, and it's followed by a small green baby candle that's kind of nestled inside. This suggests that the big, powerful selling momentum is running out of steam, and the trend might be about to change. It's a signal of a pause, a moment of hesitation before a potential comeback. All right, let's flip the script. Now we're going to look at bearish reversals. These are the patterns that signal a potential shift from an uptrend to a downtrend. This is when the bears are getting ready to take over. Meet the shooting star. I like to think of this one as the hammer's evil twin. It looks pretty similar, but it's totally inverted, and it tells the exact opposite story. So, after an uptrend, the buyers try to push the price even higher, and that's what creates that long upper wick. But they can't hold on. The sellers take over and slam the price all the way back down. It's basically a failed rally, a clear, powerful rejection of higher prices. For a trader, this is a huge warning sign to maybe think about taking profits. Pay attention here, because this slide highlights the single most important rule of candlestick patterns. Context is everything. The hammer and the hanging man, they can look absolutely identical. The only difference is where they show up. The same candle shape that signals a potential bottom after a downtrend signals a potential top after an uptrend. And just like we had a bullish engulfing pattern, yep, you guessed it, there's a bearish version. And believe me, it's just as powerful. This is a sign that the party might just be over for the bulls. The market has been in a nice, clear uptrend. That's our green candle. But the very next period, the sellers come in with overwhelming force. The red candle they form completely engulfs the entire body of the previous green one. It's just a decisive signal that the bears have taken over the driver's seat. Now, not every candle tells a clear story of a win or a loss. Sometimes the story they tell is one of a pure, dead-even stalemate. This is a doji. See how its body is just a thin little line? That's because the open and close prices are at almost the exact same level. The bulls and the bears fought all day long, but in the end, it was a draw. A doji signals pure indecision, and it often shows up right before a major trend change. It's kind of like the calm before the storm. If you remember only one single thing from this entire explainer, please make it this. A pattern is completely and totally meaningless without context. A bullish pattern only matters if it shows up after a downtrend. A bearish pattern only matters after an uptrend. That preceding trend is what gives the pattern its power. So we've just covered the basic alphabet of the market. You can now look at a chart and not just see noise, but actually see a story unfolding. So the only question left is, what stories are you going to find?